Okay, testing, 1, 2, 3, testing, 1, 2, 3. Time to get to work, time to trade. Money never sleeps, baby. Roger that, it's affirmative. Thank you, Overlord. All right, well, let's clean up the place. Let's do some technical analysis and look for some trades and do all that kind of stuff. Just for an update, it is March 30th, 2016, approximately 7:30 in the morning. That is London lunch. Time to do our daily Forex trading strategy session here at Forex.Today. Let's clean the place up and get to work. Yep. Hey, welcome to Forex.Today. Nice to see you. But this is a scary world. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, nice to meet you. My name is Wayne. I'm the Chief FX Market Strategist for TradersWay.com, an ECN. Wink, wink, nudge, nudge. That means broker, but it's the type of broker that does not take the other side of your trades. We take, when you click the button to buy or sell, we send that into the interbanking system. We do it quick. We do it at a very, very fair price. And when I say quick, actually much quicker than others. I've actually tested it myself independently, and it's fast. The execution's fast. And we have great customer service, and of course, all of our employees are very good looking. We do these sessions every day, 7:30 in the morning, Monday through Friday here at Forex.Today, or Monday through Thursday here at Forex.Today, and every Friday at FX Street. And at FX Street, I am Speaker of the Year, Forex Speaker of the Year. Yeah, cool, right on. So thank you for your loyalty. So I think we're going to have a lot of technical analysis today. Yesterday we focused on things like risk management, portfolio management, and getting your head screwed on straight as a trader. Didn't mean to go there, but that's where you guys took me. That's cool. You're the boss, and I'm the humble currency trader. And we did a lot of fundamentals on Monday, so maybe we'll do some technicals. So let's play the happy music and get started on. Happy days at Forex.Today. I got a buzzing in my ear. Maybe that's good luck in my culture. I don't know. Okay, so we got a response to Janet Yellen yesterday. And makes trading fun. You have some voting members of the FOMC speaking publicly saying, yeah, you know, April's a live event. We could probably raise in April. We could probably raise in June. And then Janet Yellen comes out for the second time in the last couple of months and said, holy smokes, we should revisit everything. Maybe we should not raise interest rates at all. We're like, what? So let's go back in time a little bit. They raised interest rates in December. Holy smokes. Dot plot says 4 rate hikes this year in 2016. 4! All right, boom, boom, boom. Dollar gets strong. Why? Well, you got to price that in. That's known information. Dot plots on the Fed. You know, they're raising interest rates. They're likely to continue interest rates. Dot plots say 4 interest rates hikes this year. In the calendar year of 2016, holy smokes, dollar gets strong, and that freaks the stock market out. Why? Because, you know, that prefers the free money. Do you want free money, or would you like to pay for money? I'd rather have the free money. All right, so the free money rally looks like it's going to come to a screeching halt. Fed's going to jack up interest rates, stock market collapses, and the Fed retreats completely from its language, which is a little strange. You're not really supposed to do that as a central bank. But whatever. So anyways, Yellen, at the last opportunity, told us that no, it's not 4 hikes this year. It's 2 hikes this year. Whoa! Overpriced the dollar. So everyone's got to get out of that dollar. Euro USD goes up because now they have to price in not 4 rate hikes, which is dollar positive, but only 2, which is still dollar positive, but less dollar positive. Fine. Then the questions are which 2, and then the stock market goes back up, and then suddenly some Fed members are worried about inflation again. So now it's like, wow, it goes from maybe only 1 to probably 2 to now almost, oh man, they're going to do April and June, and then what about December and October? And all of a sudden, we're game on again, right? And then Grandma Yellen speaks yesterday, new is what she says. So what does that mean, Basil? Is it only 1 hike, or are we just back to 2? 1, maybe 2? And it kind of feels like 1, maybe 2, right? Doesn't it? 1, maybe 2? But like nothing certain now. So how interesting that you get other voting members of the FOMC that they say, as soon as possible, and then some. And then the head of the FOMC says, no rate hikes, no rate hikes, no rate. Wow, makes it kind of hard to plan your strategy if you have misinformation, huh? Or mixed information. Well, we have a choice, Ryan. Maybe the world should just pile all their savings into South African banks. What do you think about that? Ryan's from South Africa. Hey, you get 7.5%. Whoop, whoop, whoop. 7.5%. Yeah, problem solves. Oh, snap. Just that easy. ADP. You want to scalp ADP? All right. Fine. Fine. Okay. You tell me. You predict the future. Is ADP going to be better than expected, as expected, or less than expected? Mark, you haven't kissed Janet Yellen? Well, all right. All right, so we got answers from higher to lower to no idea. Well, do you have some sort of solid evidence that would say it would be off trend, either better or worse? You could say, well, because of this, and then possibly this, we're going to be off trend? Or are you just guessing? Because if you're just guessing, couldn't care less. Right? I don't want your opinion. Right? I want to know what the strategy is. And strategy means, malice aforethought, sort of. Right? You thought about doing it, and then you plan on doing it. Right? So, like, what makes it off trend? Question here. Does it really matter? Probably won't change the technicals on, based on FOMC and stuff. Oh, well, okay, I'll argue that one a little bit because I do think it matters because we don't know what the Fed's policy, or specifically FOMC, right? Federal Open Mouth Committee. Okay, so we don't really know what it is. What is their trend? Or what is their strategy? So we have to figure that out, don't we? A really good jobs report might force a June rate hike. Moderate to poor results in the job market may lead to a non-rate hike in June. And I think that's what the market's playing right now. Okay? So does it matter? Yeah, you know what? If ADP is great and NFP is great, unemployment rate falls a little further. Remember, 5.0 was the target. We're easily beating that now, and if that continues, then holy smokes. You know what I mean? So yeah, good numbers will matter. And if it's not, or wage growth, yeah, growth in wages, growth, spending and stuff, and sales are pretty good. Retail sales are actually quite good in the United States. So, yeah, a positive change in wage growth and, more jobs, lower unemployment below 5 eventually means wage inflation. If we don't get it now, you'll assume we'll get it soon. So yeah, you know what? It does matter. Okay? And I think people are going to start playing it that way. And your first opportunity to get to their jobs report is going to be today. And remember, there still is a high correlation because the jobs market is essentially manipulated by almost zero interest rates in the United States, and this idea that we'll continue to keep them almost zero for years. You know what I mean? Yeah, so it's more of a sentiment thing on me. Or is it Amy? I can't quite see. Is there an R in there? I can't quite see. The text is quite small. All right, so we'll take a look. Jimmy says, think we can get caught in Japan's trap of zero interest rates? No. There's just huge differences between the United States and Japan. Even though there are similarities in sort of what got us here, the strategies out are quite different. So, low for a long time is different than zero for a long time. Okay? But, who knows? I mean, it comes down to definition, right? But, it's been 25 years and Japan hasn't really made a huge change out of their deflationary state. I think 5 years from now, things will be a lot improved in Europe and very significantly improved in the United States. Okay? That's my theory. That's how I'm going to play it. And there just quite literally is a difference in sort of culture and strategy. So, just two things here. Japan, historically, the stereotype going back 1,000 years, 2,000 years, is that, the Japanese businessman is very similar to the Japanese warrior, so to speak, where you do whatever it takes to save face, to not dishonor your family, your company, your country, honor, right? Which is cool. I'm not talking that down. There's lots of reasons why that's admirable. However, you can take that too far, like anything, right? And then you have the other side, sort of the American gung-ho, get it done, move quickly, move fast attitude that goes back for, all the way back to cowboy days, right? Just get the job done kind of attitude. That's radically different, right? It's radically different. It's almost the opposite. Like in America, it doesn't matter who your daddy is, doesn't matter what school you went to, you can just get it done. In England If you didn't go to the right school, did you go to Eton? No. Well, then forget it. You're a loser, right? It's England is still a lot like that. Like, well, who was your daddy? What school did your dad go to? Right? And you're like, well, I don't have a daddy. Right? Well, good luck. Right? So there's still some of that around the world. So in America, it's like just get the job done. It doesn't matter who you are, what you are. I don't care what your situation is. I don't care what happened yesterday. Just get it done. Here's the ball. Run. Right? Run, Forrest, run. And so in America, it's just like, holy crap, did you see the entire financial system crash? Just do something, anything, just do something, throw stuff at it, right? No matter how bitter the medicine is, you just gobble it down, glug, 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 fast, 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 right? There's a huge cultural difference there. But Americans, in business settings globally, can be seemed as very short term, very loud, very boisterous, crude, even. You know, calling the king by his first name. you know, hey, what's up, Jimbo? Hey, you got any decent food around here? Like your pajamas, by the way. You're like, whoa, you just insulted that guy like 5 different ways. Oh, well, that's how we talk in America. Hey, Charlie, how's it hanging, right? So anyways, it's these cultural things do make a difference, right? And there's lots of good, there's lots of bad. Not everything's perfect, and upside, like we said, you talk about mechanical engineering. There's always a mechanical advantage and a mechanical disadvantage, right? So whatever. So is it really? Is America going to be like Japan in that situation? Well, there are lots of similarities in the problem, but radical differences in the solutions, right? So I doubt we're going to get the same result. Okay. Germans take business very seriously. Oh yeah, sure. Yeah, the Germans and the Swiss, huh? You're like, dude, seriously, a gray suit again? How many gray suits do you have? 9. Hey, is that none or 9? Anyways, hey, let's. Holy smokes! Why do you guys make me do this? All right, so let's. This is the global stock market around the world and some other things. Okay, right? So, Grandma Yellen said, "Free money continues to pour." Well, not free money, cheap money. Now they're not printing. There's no quantitative easing, so there's no free money, but cheap money. Okay. By the way, don't let me get distracted with ADP coming out. We'll do that. Um, Nikkei up. Euro stock market up. German stock market up. UK stock market up. Dow, the Dow Jones Industrial Average up. Some of these are all different charts. Let me change this. Is that an hour? No, let's change it. Okay. As you can see, S&P 500 up. Gold, not too sure what it wants to do, huh? It's up, but it's still down. You know, something right with the world today, but I don't know what it is. Right. So it's up, but it's still down. Living on the edge. Da, 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 da. Da, 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 da. Hang on. Mm, 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 mm. I just, for some reason, want to do that today. I don't know. I wish this would fill in with color, huh? That between the two channel lines that it would be solid, transparent color. All right, so that's gold. So up off the bottom, up off the monthly central point. I mean, if I have to remind you when we talk about these things, if you're already a bull, that's not a complicated trade, right? Right. So with my mentoree, we're working on swing trading setups, in particular, getting them Mondays and Tuesdays, and that's a pretty classic idea where if you happen to be bull and price is above the central but comes down to the central, this whole area in here, actually, if you're going to play monthlies, this whole area in here, where's monthly M2? Okay, this whole area that I just highlighted on the monthly pivots is the expected buy. You know what I mean? Like that area there is where if you were a bull in this scenario, you would want to buy it. It has nothing to do with what Janet Yellen said yesterday. I mean, it went up, but again, it's funny how fundamentals, obviously someone was thinking that earlier, but whatever. As long as you look for it, you can manage your risk. It could go a little farther down, right? But you're like, oh well, we're right around that monthly, 1,200. Obviously, $1,200 would be a psych level, wouldn't it? Right? And then you're like, it's a monthly pivot. What would your target be? Your actual target is monthly R2. And I'm not saying it's going there. I'm just saying if you happen to be a bull, that's where you'd buy. But this is way up there, 1353. Now the funny thing about that, 100 years ago, and I mean like I don't know, 18 months ago, I can't even remember. The last trade I was hardcore adamant about was shorting gold at 1382. And I can remember that because it's a SIP number, right? 1382. Where was that one? 1382. It was it's one of these ones, and the target was 1100, I think, right? Because I said people are going to defend 1,000, but they're not going to wait for 1,000, so they're going to start defending it between 1,100 and $1,000 per ounce. Do you guys remember that? This is a long time ago now. We're talking. This was 2014. I don't know if you were on my team back then, but it was really clear. Sell it at 1382. Target, 1,100, because between 1,100 and 1,000, people will start defending it simply because it's 1,000. And, there's a lot of the world that's holding physical gold. Right? So and it ended up going to 1,500, exactly right between 1,100 and 1,000. You're like, yeah. So anyways, here we're way back up here at 1382, and it's kind of interesting, isn't it? Is that going to last forever? Don't know. Something right in the world today. What? Man, so many things going on. What is this? What, I've been invited to a party in China. You have to send that to me right now in the middle of a webinar. I don't get it. Hang on. Well, all right. So I've been invited to a party. Yay me! All right. So, oh yeah, whoa, I got to move that. So we keep an eye on the clock for me, huh? You guys distract me in good ways. You're so beautiful. I look your way and I fall down the stairs. All right. And then oil. Or if you're George W. Bush, oil. Oh, oil. Oil. Mark oil. Axis of evil. All right. Oil. Yeah. Interesting, right? Yeah. I think, and I've said this before, and we'll see. We'll see. Sideways is still what I'm thinking, like forever, really. Wow, the sunrise is really nice, huh? The sun's moved. It used to come up here, and now it's coming up right there. Pretty nice. It's a weird job, huh? Working these weird hours, isn't it? Basically having lunch as the sun rises. Reminds me of my stripper days, right? I was young. I needed money. All right, so yeah. So, anyways, we got oil on the daily up to the 200 EMA fair market value, quite elevated. And notice how it came straight down. Isn't that neat? Right? Now, keep in mind these are currency setups, currency pair setups. This chart kind of thing that I created. I don't know. It's been 10 years now, longer than 10 years now. For basically, I started Euro USD like everybody else. And these settings seem to work really well for me. And so, I tweaked and tweaked, but pretty quickly I got to the setup that you see here: 5.8, 21.55, 200. Haven't really changed it in 12 years, 13 years, I don't know, right? But anyways, here's oil, comes up to the, double bottom, up into here, then down. Kind of interesting. I don't really expect this to go to 25 again. I don't really expect it to go to 65 again, but if it did, it would come back down quickly. Okay, great. So what is that? Where does that leave us now? I'm stinking a 35er. Or we just simply move between 30 and 40, 30 and 40, 30 and 40, 40, 40 to 30, 30 to 40, 40 to 30, 30 to 40 for a very long time. $35 and sideways, yeah. If you're going to play it off this, sure. Now, normally I would draw a fib here, right? So I guess I have to do that just because it's a requirement. And if you're going to play it that way, let me mark this up. What I often like to do is take these wicks on the low side, because that clearly was support on the left. This was clearly resistance on the right. So basically a 50% to 618 Fibonacci retracement. Let me just mark it that way. That looks normal, right? That looks good, doesn't it? Wow, I hear sirens again. That's twice this month I've heard. It's fire engines. Yeah, the neighborhood was in uproars the other day because someone's two dogs got loose and were running through people's yards. That was a crisis in our neighborhood. Everybody was talking about it. Oops. Like, well, there could be worse things happening in the neighborhood, I'm sure. Let me do it this way. Yeah, wow, listen to the sound. I don't know if you can hear it, but here, let me shut my window. I just love listening to the geese in the morning and the ducks and the frogs and the turtles. Well, turtles don't sing, but you know. Actually, it's that time of year that pretty soon the turtles are going to be coming up on my back lawn to lay eggs, and then the geese are going to be coming around with their little baby geese. All right. All right, so I'm kind of thinking target in here, right? Sort of in this area. If I was playing this purely technical, now of course oil is extremely fundamental, but also oil doesn't always trade on what I would call fundamentals. In this case, we're talking about supply and demand, right? So do you guys remember like the Arab Spring and oil from Libya, which was 8% of the world's oil and natural gas, went offline, right? What happened to world oil prices when Libya came offline and some other North African reserves? For example, Egypt provides a lot of nat gas. So what happened? Because that would be a fundamental issue, right? Less supply. Well, as you would expect, oil prices went up. Okay, cool. That's fine. Okay, but Saudi Arabia is a swing producer, which means if there is a supply disruption, they have so much spare capacity that they can just add more supplies into the market. Now, other places around the country, they're already at 100% capacity. So if there's a supply disruption, we're all in trouble. Prices are going to go up significantly. Well, Saudi Arabia is a swing producer, so at that time, they just added more oil and that gas. That was it. Done. There was no supply and demand issue, but we had a risk premium. Oil prices were, 10 or 15 or $20 higher than they really needed to be fundamentally, but it was sort of this risk and geopolitical risk and fear and speculation and all those different things going on, but there really wasn't a supply issue. You would think so. Some supplies did go offline, and it was very unknown when they would return to the market, but we had enough oil. Just Saudi Arabia just said, oh, how much oil does Libya produce? 2 million barrels a day. Fine, you got it. 2 million barrels a day. Good. Next. And that was that. Thank you, Jimmy. So, so whatever. But if we were just hardcore, technical analysts, I'd be thinking somewhere like that. So let's say a 50% retracement. That would make me aggressive. And that would predict a 1382. And that would put us up to, $50. Let's call it 49.80, 49.50. 49, whatever. Okay? Down to 35, up, up $15. I'm not so sure that's going to happen. But a falling dollar, that could help. Right? Because oil is priced in dollars. So, let's say you have a barrel of oil sitting in your backyard. Yesterday it was valued $40, let's say. And then something happens overnight, and the value of the US dollar, the purchasing power, right, is diminished by 10%. Something happens. The Fed cuts interest rates, whatever, right? So 10%. If nothing else changes, everything else being equal, and Harvard does this to me and all kinds of questions, I'm like, I don't get it. What does that mean? What's the price of oil today? 44. The value of the oil hasn't changed. The purchasing power of the dollar's changed. So now you'll need 10% more dollars to buy the same oil. Oil hasn't gone up in value. Okay? So, be interesting what happens here. You would think that low interest rates, cheap money, stock market rally, oil up. You notice how that didn't happen? Thank you, Artem. So this isn't your dad's oil market, okay? This isn't what you would expect. It's still not supply and demand per se. This is oil is going to go up close to 50, okay, and then what? Frackers are going to come online. Some of the Canadians are going to come online. Canada needs what, $60 a barrel. Frackers need 50. But you know what? Here's the thing. Frackers, in particular American frackers, again a cultural thing, is if somebody says, well, Saudi Arabia is going to keep oil below $50 a barrel. So fracking in the United States will not be economically viable, right, at all, because they need more than $50 a barrel. What would an American do? Find a way to get it done for 40. Invent the technology, dude. Just invent it. They'll find a way. Oh, they'll find a way. It's called entrepreneurialism.
Trading up about a 30%. Dollars for the 96.27. Cable holding above the 144 handle. Dollar yen off its worst level, still down 0.25%. 112.24.
By the way, there's the range. Remember, we predicted it would go from the bottom to the top? Told you so.
Just under 10 seconds for the March ADP. Again, the consensus is for an increase of 195,000. Comes in 200,000. The slight beat there for the headline ADP.
Small business plus 86,000, medium plus 75, large business plus.
See, guys, I'm a genius. It came out pretty much as expected on trend. Like, seriously, why would it be off trend? You better have some evidence, have some facts.
For the month of February, revised down to 60. Down revised by 68,000.
So I'm one of these guys, like 9 times out of 10. Oh, last month revised down. Uh-oh, that could be interesting. I'm the type of guy that 9 times out of 10, if you ask me, like, hey, what do you think non-farm payrolls is going to be? I'll just say, well, what's the trend? And they'll say, well, that's no fun. You can't do that. I'm like, well, then why would it be different than the trend? No, I want you to guess. I don't guess. Right? So anyways, as expected, I just heard over the wire, though, that last month was revised down, which I don't get, though. I thought ADP just simply looked at how many checks they printed. But anyways, ADP was revised down by 9,000 jobs. Last month was 214. Now they're saying 205. This month, 200. They were expecting 195. So, if last month was 205 and this month is 200, that's pretty much within, 2 degrees of separation or whatever, 2 degrees of deviation. Small businesses, better than expected. Medium businesses, better than expected. Large businesses, less than expected. But you know what? I'm okay with that because ADP is a small business outfit, basically, small and medium. And there's some big upside on that, which is good because 2/3 of the economy, I believe, is actually small and medium-sized businesses, right? Most people don't work for giant companies, right? Not everybody works at Google and Apple. So all my friends do, but what else? Goods producing sector better than expected. Service producing sector, 74 months in a row of increases. 74 months, is that a trend? Construction, it's not bad, not good. Manufacturing, better than expected. The job market continues on its amazing streak. The March job gain of 200,000 is consistent with average monthly job growth of the past more than 4 years. Oh, that was a chunky one. So we're on a 4-year trend, guys. You know what I'm talking about? Like, woo! That's how I come up with my numbers. 4-year trend. The only industry reducing payrolls is energy. And that's on trend as well. You know what, though? I think that's going to start to change. Well, Nick says, when does the 7-year cycle kick in? And, you know, I've been saying that the whole thing now relies on Europe. And we have approximately, in my interpretation, about 5 years for Europe to be where America is today. And when that happens, China will be in a different place than today, probably better. And then Australia and Canada will be in better places than today. So I'm living on a 5-year cycle, which puts the U.S. stock market up for, probably another 7 years. And we'll have, what is that? That's going to be like 14-year super cycle or something, right? So let's, we should probably do an event someday where we plan out our retirement. We plan out the next 20 years. Wouldn't that be neat? We're like, what are we going to do for the next 20 years as foreign exchange traders? What are the cycles and super cycles going to be at the central banks? Like, for example, scenario number 1 may be interest rates slowly increase, but never stop increasing. Right? Thought process there, quantitative easing, on the tune of what, tens of trillions of dollars globally? The Fed did trillions, the Eurozone's doing trillions, China's done trillions, that kind of thing. Japan's done trillions. Is there going to be a consequence to that of slow growth and eventually we do have the inflation that everyone's worried about? Why are central banks so worried about inflation? Well, maybe we'll actually get it, and that might be a problem, right? So we go from 0 and interest rates go up 1% a year for 20 years. So on and so forth. I think it'd be very interesting. Yeah. CDs would have a good return. Well, relative to what? CDs don't offer a good return. They offer safety and stability. Yeah. Okay, but then, so let's say you get 5% on your CD. and you face 5% inflation. Nothing happened. Better than your bank account, but no. So like, let's talk about that. And I don't mean to poo-poo on CDs, but what is a CD? It's a certificate of deposit. You're basically telling the bank, I promise not to withdraw this money. So, Mr. Bank Manager or Madam Bank Manager, go ahead and invest your money. Go ahead and invest this pile of money in something longer term, because I'm not going to demand it. So you can have it for 5 years. Do whatever you want with it. You just pay me, 2%. Okay, cool. Green light from the bank to do whatever they want with your money. So they pay you your lousy 2%, and they loan it out. They could buy a bond that makes 3%. Well, you could have bought the bond, but I don't know, you find that risky. So you put your money in deposit, you're happy with the 2. They put it in a bond that gets them the 3, they're done. Free money. Or they lend it out to in form of a mortgage or a line of credit for a local business or whatever. And so what is a line of credit charge? I don't know, 6%? What is a mortgage? 4.5%, 5%? So whatever. They could, make 50% to 100% return on your money, pay you the 2%, and keep 80% of the profits for themselves. I know they face the asymmetrical issues and stuff, but so do you. So that's why you give it to them, and there's less asymmetrical, challenges. So that they can make those decisions better than you, right? Fine. But like, in fact, over Easter, I had a conversation, and someone brought up the CD idea, right? And build a ladder of CDs. I'm like, okay, that's fine. That's fine. You're just allowing someone else to make money, right? While you maybe tread water at about inflation. Okay, great. I said, well, what if you just lent it to, and I just picked a company at random. I'm like, Ford Motor Company. Do you think Ford will still be selling cars in 5 years? What do you guys think? I don't know what their bond rating is. I'm sure you can get really knee deep into it. But they didn't have to take money on the bailout. Remember, they were the only U.S. company that refused to take money. Right, so why would the trend change, right? So, okay, maybe you decide to lend Ford Motor Company money for 5 years. It's called a 5-year corporate bond. What does it pay right now? 9.5%. You get 50% return on investment in the course of 5 years. You lend them $10,000, you get $5,000 in payments over the course of the 5 years, and then you get your $10,000 back. Hallelujah! What? How did your CDs do? Well, how do you know your bank doesn't just take your CD, give you 2%, and then give it to Ford? So, but look, bonds are risky and all that kind of stuff. You need to know what you're doing, but that, just on the basics, right? You're going to make 1% return on your CD, however. Okay, you're really only going to get, what, 1%, 1.5%? I don't think you're going to get 2% on a 5-year. Okay, it probably pays a little bit more than the 5-year. What does a 5-year Treasury pay? Not even 1%, right? So that means a 5-year CD might pay you 1%. Ford Motor Company will pay you. We looked it up. You get your money back in 2021 or something like that. And by then you've earned 50% in income, and then you get your money back. So the risk you face is that inflation skyrockets in the next 5 years. Probably not going to happen. Now, interest rates will go up, so the value of your bond will likely fall, but you're not going to sell it before the end of the 5 years, are you? No. Especially if you treat it like a CD. You're not a bond trader. You're not just going to flip it, hold it for 5 days, and then sell it again, right? No, you're a lender of money. You're like, yeah, I'm in the business of lending money. Right? Oh, Horace, just go on the go to federalreserve.gov, I think it is. Oh, these things? Oh, that's funny. Those are, I was joking. Those are not Fed dot plots. Those are it's the parabolic stop and reverse indicator. Where do they put it here? Where do they put it? Trend? Yeah, parabolic SAR, stop and reverse. Okay. Okay. So just interesting, right? That's what banks do. Oh, you want price on the chart? Like that? Oh. Oh, you don't like the okay. That's the simplest one that I use. All right, so a lot of amazing action here. So, has your opinion changed whether you're a bull or a bear? Probably not. What's love got to do with it? So, you're a bull or a bear. You either sell high or you buy low. Now, I would like to change this template a little bit. You know, I like more information because I can look at what I need to see and I can filter everything else out, only because I'm so used to it, right? So I can do like this. And this tells me a lot of things. Midpoint psych level. Do you think that's a coincidence that we topped out at the midpoint psych level? Nah. Okay. And then this retracement, we bottomed out at the open, at the daily open. Yeah, probably not, right? Do you guys remember yesterday? We were talking about when you break above the psych level. So 44 is down at the bottom. Where do you buy? Okay, we break above 44. We go all the way to 44.50. Where's the new buy zone for a swing trader? Between 80 and what? 80 and 00. And by the way, we had that on the pound dollar going up, didn't we? Yesterday? So like, again, we looked at it earlier, but on a different chart, you know, we were looking at this as support and way up here at 45 as resistance. That was a 500 pip call, wasn't it? We're pretty gosh darn close to that 500 pip move now. And the interesting thing is we're only in a range. So you're welcome. Okay, going back to this now. What was I going to do? Man, I got distracted there. Oh yeah, 80-20. Or in this case, 80-00 is the buy zone. So let's do a horizontal. And let's mark this as, okay, that's 43.80. And we have to do another one to mark the psych level. So what we talked about yesterday is that, and I'll use the ellipse, right? Read my ellipse. What we talked about yesterday was if there's a bullish move and you're above the psych level and it retraces back to the psych level, there are going to be buy orders somewhere between these two lines. That's where you would consider buying, and you would look for things like, I don't know, this move here, right? Ciao. Maybe this 1, 2, 3 idea. Will it stick and continue? I don't know, but that's why you should be kind of long in this zone with your stop close. Okay? And you want to be in the zone. I don't want you to be long up here because you're like, well, I watched it and reversed there, and 35, 40 pips later I go long. No, 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 no. As soon as you start to see green candles in here, like some sort of stabilization, really you should be long at 90. And it's already gone up 35 or 40 pips from then, right? Now, if you were a bear, okay, what would you do? A bear, you'd probably have it set up as a reverse fib, and you're going to sell somewhere, but in this case, someone sold the 618, then the news came out and they sold the 786. Not good for bulls, right? But if I were me, I wouldn't be too bearish on this until we got lower than this area here. Okay? And once I saw that, I would say, gag Zeus! Right? I'm like Captain Picard, shields up, red alert! And I would immediately be thinking change of trend, and I would be selling lower highs. Okay? But I wouldn't change that. I wouldn't become that bear until we broke this area here. Okay? So even if the bears did get in this game, doesn't mean I would have traded it that way. And you're always, 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 always going to face this problem. That's why you want to, if you buy it, you want to buy it low, as low as possible, because there is a high propensity for this to come down if bears get involved. Is there any evidence that this would happen? Well, if I looked at this chart, I do see some divergence, but I'm assuming we're going to scoop this up when the 21 comes up and tickle our bottom. Okay? So I look at this and I'm still a buyer. Okay? And is this, yes, no, that's Tokyo yesterday. 80-20. I don't remember where we did this one. It must have been in here, right? This was the buy zone we talked about yesterday off this roll reversal. Right? Was that it? This was our buy zone yesterday, the New York Open. Hallelujah! Hey, well, you're welcome. Hey, got your email, Dan. Daniel, did you, yeah, so are you going to do the bullet train then without me? I can't leave. I can't leave on, yeah, I don't think I can. Also, Yeah, and I called the airlines too, and they're like, man, if you change your ticket, it's like a whole new thing, and we're going to have to penalize you twice. And I'm like, no, 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 no. I just want to get on the plane in Shanghai. No, we'll have to cancel everything. Like, what do you mean? I just don't want to get on Shenzhen. Throw my ticket away. Just, nah, they're like, no, we can't do it. They're like, you cancel your Shenzhen, we cancel your whole trip. Oh, dang it. So, I don't know. Yeah, well, 12-hour bullet train with you, Dan. Sounds great. Okay, hang on. Let me get something here. I was looking something up, and I want to look it up. Hang on. Industrial production was horrible out of Japan. I don't know if you traded that news. Oh, okay. Kiwi was something I wanted to talk about. By the way, that triple top on the euro dollar is holding nicely if that's what you are doing. Yeah. This looks interesting, what we were doing here, doesn't it? I haven't looked at this chart in a long time. Look at that. Hey, I wonder if it'll bounce here. Oh, snap. Yeah, actually, you know what, Daniel? I'll have a bit of time in Shenzhen, so maybe we'll just hang out together there. I was, maybe we'll go buy some laptops or something. Do some shopping on Sunday. I see that various Chinese manufacturers now are making 10-inch tablet 2-in-1 laptops. They're just 10-inch tablets with a detachable keyboard. 2K resolution. What? 1920 by 1200 on a 10-inch screen? Say what? I want to get one of those. Shenzhen's the place to be, I guess, to pick that kind of stuff up. So, yeah, maybe we'll do some shopping. All right, so anyways, Kiwi may be doing the comeback. Kiwi's the comeback kid. Very interesting. It's early in the cycle, in my experience. So, but I'm looking at this thinking next cycle down, I'm going to gobble this thing up. So Evans just spoke somewhere and said global risk is higher now than it was back in December. So they're all backtracking. Really, nothing's changed globally since December, so. So, okay, building permits came out last night out of New Zealand. Last month, -8. -8%. Okay? This month, up 11%. Woo-hoo-hoo-hoo! Really? Yeah. Pretty nice. So somebody wants to build stuff in New Zealand. That's a pretty good sign. But of course, after, such a previous decline, it's probably easy to get the big increase. But it is a 7-month high. Could be worse, as they say. Um, yeah, I'll be busy Friday, Daniel. I'm going to do some live trading on Friday in front of millions of Chinese attendees, and then I might have to do some panels or something on Saturday. But I think I'll just be in the spa, spazzing in the spa. So it's Friday, like 5 p.m. It's late, but that's the London Open. So I'm going to trade live at the London Open on the trade show floor. And then Friday night, late, like, I don't know what it is. It's probably like almost midnight. I got to do my FX Street presentation. All right, so anyways, Kiwi looking pretty cool, huh? Looking pretty cool. Are we going to trade it like a bottom? Are we going to trade it like it's breaking a range? How do you identify the range? Is this our range? Is it farther the other way? Yeah, how do we play this, right? Next level of resistance, I guess it's got to be here, right? So that's 1,000 pips off the bottom, guys. If we go to the top here, buy it at, basically 83 on our way, or 73 on our way to 83. Holy smokes. Okay. Wow, it's starting to take off now, huh? Good. A little bit of yen weakening. So the yen got strong yesterday simply because the dollar got weak, is my idea. Okay. Could be an opportunity there, guys. Hey, what do you think of this chart? What do you think? Is it easy to spot the consolidation and breakout? Yeah, I was messing with that the other day. So would you have bought this dip here at the monthly, weekly central pivot point? Easy spot after it happened. Well, but what you should be doing is you look at it like way at the left here. If you break below it, you want to stay bearish, okay? And then, if you break above it, you don't want to be bearish, okay? And as you can see, the market goes neutral. And typically, if you're going to trade it as a breakout, you're going to look at it like, like this. Okay. That kind of thing when you catch pullbacks. Oops. That's not the straightest line in the world, but I think you understand what I mean. So, there are trades in here for show. Here's another one here, breaking this resistance. So, breakout, buy the dip, breakout, buy the dip, breakout, buy the dip. Pretty simple stuff. The trick on this, though, is that they've been cutting interest rates, right? You can do it here, or you can do it here, your call. All right. So you can see, all right, breakout, pullback, buy, breakout, pullback, buy, breakout, pullback, buy, breakout. What do you think might happen next? Yeah, Miles says only after the breakout, but the interesting point, though, Miles, is that you recognize that it's consolidating. So you set up the breakout. You don't really care if it breaks out down or up, but you say, whoa, 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 look at the cluster of moving averages, the sideways cloud, the tunnel cloud, right? The funnel cloud, whatever you want to call it. Yeah, well, you add other things to it if you want, right? I mean, to me, it's all the same, right? Breakout, pull back to the cloud, buy it. Well, back to the cloud, buy it. Break through the cloud, get out, retrace, sell it, retrace, sell it, break out, whatever. Trade it where you want. I'm just messing around. Holy smokes, look at the time. All right, so you should be watching yen's weaken here. Lots of nice opportunities on the yen pairs. I would look for that to continue. Euro yen was a buy at the 4-hour 21. Pound yen was a buy at the 4-hour 21. So on and so forth. Not terribly complicated stuff. Kiwi yen was a buy at the 1-hour 21. Let's do it this way. Okay. Breakout, pull back, buy it. I mean, there are setups there. You should be preparing for it. I don't think it's going to continue up much from here. I mean, I don't really know, but you kind of want to buy dips, right? Right? Look at the previous dip. You take the high, drag it across, it's your new buy zone. I mean, this is the stuff I teach you absolutely every single day for days and days and weeks, months and months and years. Okay? Buy the dip, 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 buy the dip. And then when it makes a lower low, stop buying the dip. Is that run upon a popena? Where you been, Rana? Holy smokes, eh? All right, so I guess what I need to do is upload the video to YouTube. Have you guys been leaving comments for the authors, for the analysts? You know, it takes time to write these reports, right? Right? It takes time, right? How long do you think it takes to write an article like this? Make sure it's formatted nicely and so on and so forth. Yeah, an hour, 2 hours. So, do you have the time to say, hey, great job, liked the article, keep it up? Could you do that? Right? Took him an hour. Took me 12 and a half seconds. So I'm going to upload my video here. I don't know, if you guys miss the webinars, do you watch the videos? Oh, look, someone left me a comment. I bet you it's Ryan. Tyler. There we go. Cool. Tyler's nice. I think Tyler actually does leave a comment on every single post. So, thank you for that. So anyways, get involved, guys. It's your community. You can make it as awesome as you want it to. As you want it to be, right? So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you for being on my team. I really do appreciate your loyalty. I hope these sessions help. I hope they bring insight and help you develop your skills and earn your confidence. And then when you're ready, financially, mentally, metaphysically, to trade real money, you'll choose TradersWay.com as your prime broker, and you'll build your successful Forex trading career and business for many years of profit and fun. Well, Fred, send me an email. Tell me what you want. Wayne@fxbootcamp.com. So again, peace on earth. May the pips be with you. May your profits be above average. See you tomorrow.